All right, welcome. Today we are tackling a puzzle that seems to pop up in crypto every single year, that dreaded September slump. We're going to try to decode this whole mystery by looking at the hard data, the historical patterns, and, one pretty unconventional theory. So let's just get right into it.
It really all boils down to this one question. You see it every year. Summer ends, fall starts to creep in, and this sense of caution just settles over the crypto markets. But is that just a vibe? Or is there something real, something in the numbers that backs it up?
Well, the numbers don't lie. When you look at Bitcoin's average monthly performance all the way back to 2010, September just sticks out like a sore thumb. It's really the only month that's consistently in the red. We're talking losses of about 4 to 5% on average. And what's crazy is that it comes right before October, a month that's so famously bullish in crypto. It's a real head-scratcher.
Okay, but averages only give you part of the picture. To really get what's going on here, we have to zoom in on the most important times in a crypto cycle. Those key years right after a Bitcoin halving. That's when the real patterns start to emerge. So let's rewind to 2017. August kicks off, and the market is just on fire. The price rockets from under $3,000 to well over $4,700. The optimism was just off the charts. Then September hits, and bam, a massive fear-fueled sell-off slams the price all the way back down. It was a classic, brutal shakeout before things recovered a bit. Now you'd think that was just a one-off, right? Nope. Let's fast forward to 2021, and it's like we're watching a replay in high definition. You have this big, bullish run-up through August. Bitcoin pushes past $52,000. Everyone's feeling good. And then, right on cue, a harsh mid-September sell-off sends prices tumbling right back down. And when you put these two cycles right next to each other, the pattern is it's impossible to ignore. August is the month where optimism builds, where we see that strong bullish growth. And September seems to be the month that comes along to test that conviction with a big, panicky sell-off almost always right in the middle of the month.
Okay, so the history is pretty clear. We see the pattern, but that still doesn't explain why it happens. And when you see patterns this consistent, you start to look for reasons that might not be so obvious. And that brings us to a really fascinating, and I'll admit, a pretty out there theory that connects all of this to a much, much older calendar.
In the traditional stock market, traders have had this old saying for years, sell Rosh Hashanah, buy Yom Kippur. It's this piece of market wisdom that basically points to a period of weakness right between the two Jewish high holidays. So the question becomes, could this old world idea actually apply to the modern 24/7 world of crypto?
The theory here is that each holiday carries a different kind of market energy. Rosh Hashanah, the first one, seems to line up with moments of distribution or local tops, when fear starts to set in. Then you have Yom Kippur, about 10 days later, which tends to mark the climax of that fear, the final washout event that paradoxically brings clarity and a potential bottom to the market.
Now, if we look ahead to 2025, these dates create a very specific window to watch. Rosh Hashanah is in late September, Yom Kippur in early October. Now, in any market, holidays can mean fewer people are trading, so you get thinner liquidity. In crypto, where things move so fast, thinner liquidity can mean way more volatility. It could basically pour gasoline on that seasonal fire we already expect in September.
And this is where it all comes together. This is where we try to connect that, let's call it esoteric theory, back to the hard price action we've already looked at. Is it possible that these ancient cultural rhythms are actually laying out a symbolic blueprint for what the market does?
I mean, look at these parallels. The spiritual idea of judgment feels a lot like the market sorting out the strong hands from the weak hands, doesn't it? Atonement, or this idea of surrendering attachments, well, that sounds an awful lot like market capitulation, when everyone finally gives up. And forgiveness? That's the market reset, a clean slate and a fresh start for a new trend.
So this gives us this potential 4-step roadmap. It all kicks off with confusion and distribution around Rosh Hashanah. Then we go through this volatile cleansing period. It hits a climax with surrender and capitulation around Yom Kippur. And then, finally, out of all that chaos, we get clarity and a new trend, just in time for Q4. So, we've got the historical data. We have this really interesting symbolic blueprint. What does this all mean for the next big cycle in 2025? You know what they say, history doesn't repeat, but it often rhymes. Is that what we're looking at here?
Well, if these patterns do hold up, it gives us a pretty clear set of signposts to watch for. We'd expect that late summer rally fueled by a lot of optimism, then a pretty significant September pullback, maybe right around that Rosh Hashanah window, and then a really crucial pivot point around early October that could be the launch pad for a huge Q4 rally.
So here's the bottom line. Nothing in the markets is ever guaranteed. We all know that. But the fact that we have this historical seasonality lining up with the symbolic blueprint, it creates a really compelling framework. It's like we've been handed the script for crypto's most predictable month. The only question left is, will the market follow it?